Welcome back to Investing Talk Podcast.
Today we're looking at the company formed by the merger between Trump Media and TAE Technologies.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay, where do we even begin? This is, it's not a normal deal. We're talking about a social media company suddenly trying to become a fusion energy developer.
Exactly. I think the first thing to grasp is that this is a fundamental, total strategic pivot.
A pivot is putting it lightly.
Right. What we had before was a pretty volatile single-segment social media story.
And now?
Now we're looking at a proposed diversified technology and, an energy platform. It's a completely different animal.
Let's talk about the scale of that change, because the numbers are pretty staggering.
They are. The deal values TAE at more than $6 billion in equity.
$6 billion. And the combined company is split how?
It's roughly a 50-50 split between the current shareholders of both companies on a fully diluted basis.
So what that means for you, if you're an investor, is that you're suddenly buying into a much, much larger theoretical market.
Vastly larger total addressable market, or TAM. Yeah. I mean, think about it. Before, you were betting on them competing for ad dollars against giants like X and Meta.
A tough fight.
A very tough fight. Now you're positioned in the multi-trillion-dollar energy market. It's a whole different league.
And I noticed the language management is using is very specific. They're not framing this like a normal business.
No, not at all. They keep using this term, a capital platform.
A capital platform? What does that actually mean in plain English?
Well, it's basically a signal that they're not a cash return story, not in the short term anyway.
Okay.
The idea is to use the company's stock, its equity, as a kind of currency to fund these huge, what they call high beta growth projects.
High beta meaning high risk, high reward. So things like fusion power plants.
Exactly. Fusion power plants, AI-focused energy infrastructure, even their life sciences division. The media business is really just the vehicle, the public funding source.
So the whole strategy is to use the brand premium built into the stock to fund dub tech that would normally struggle to get this kind of money.
That's the play. It's an innovative structure, for sure. Highly speculative, but innovative.
All right, let's get into the tech itself, because that's the real headline here. TAE isn't some garage startup, right?
Not at all. They bring over 25 years of R&D and fusion to the table, and their core claim is that their tech has managed to shrink the reactor size, the cost, and the complexity.
That's the holy grail in fusion, isn't it? Making it smaller and cheaper.
It's the key to making it commercially viable. TAE believes they're, and this is their term, poised for commercial application because of these breakthroughs.
Poised is one thing. Actually building it is another. Their timeline seems aggressive.
It's extremely aggressive. Yeah. They plan to site and start construction of the first utility-scale plant, a 50-megawatt unit, in 2026.
In 2026. That's just around the corner, especially for something that's never been done before commercially.
It is. And if that works, the plan is to scale up to much larger 350 to 500 megawatt plants.
So for an investor, what's important to know is that this doesn't mean revenue tomorrow.
No. You won't see near-term GAAP revenue from this. But what it does, or what it's supposed to do, is create a credible path to project-level revenue later in the decade.
But I have to push on that 2026 date. With all the regulatory hurdles, permitting, siting, that just feels like the biggest point of skepticism.
It is. It's the #1 execution risk, and we'll definitely dig into that.
Yeah.
But this is where the money from the media side comes in.
The funding package.
Right. TMTG is committing up to $200 million in cash at the signing, plus another $100 million when the initial S-4 gets filed.
So $300 million up front.
Which is a huge deal. It de-risks TAE's immediate funding gap. It means that they can focus on engineering instead of constantly chasing private capital.
And it's all happening against this backdrop of, massive energy demand.
That's the macro trend they're tapping into. They're explicitly positioning this to solve the massive power needs of AI data centers.
So it's an AI play and a clean energy play, rolled into one.
Two of the biggest growth narratives you can find right now.
Okay, powerful story. But let's ground ourselves in reality for a second. The financials, as they stand today, are, they're not great.
No, they're not. You're looking at limited revenue and ongoing losses.
Yeah.
And the stock has been incredibly volatile. It's seen a significant decline just in the last 3 months.
So how does the bull case counter that?
The bull case rests on the balance sheet. The media company's strong cash position is the strategic asset here. And because the deal is all stock,
They're not taking on new debt.
exactly, they preserve that cash for what really matters, which is the fusion development.
And yet, even with the losses and the stock dropping, it's trading at what, around 1.3 times price to book?
It is, and that tells you something important.
What's the takeaway there?
It means the market is already pricing in a premium. It's valuing the company at more than its tangible assets are worth on paper.
So investors are already buying into the idea of this fusion platform even before it exists.
They're capitalizing the concept, yes.
This brings us to what you call the multi-layered moat. It's not just one business.
Correct. You're buying into 3 distinct layers. First is the media niche.
Truth Social.
Right. It has a very defensible, highly engaged audience centered on that Trump brand. It's not a cash cow, but it's a powerful marketing tool.
And it provides the public listing, the funding engine, so layer 2.
Layer 2 is the fusion IP, the duct tech, TAE's proprietary reactor designs.
Yeah.
And importantly, this will be one of the very first publicly traded pure-play fusion companies in the world.
That's a huge first-mover advantage.
A massive one. And the third layer is just the ecosystem breadth. You've got media, you've got power solutions, life sciences. It diversifies the shots on goal, so to speak.
Let's talk about the market reaction. When this news dropped, the stock it exploded.
It did. Single-day spikes of 33 to 35%. That's a clear signal that the market sees this as truly transformational.
And we're seeing some interesting signals on the short interest side, too.
We are. Short interest recently fell over 17%.
That's a big drop. So for our listeners, what does that suggest?
It suggests the bears are backing off. The original reason to short the stock, a volatile media company, has fundamentally changed.
So that old thesis is broken.
It is. And while short interest is still high, around 7% of the float, that sets up the potential for a big short covering rally if they start hitting milestones.
Media sentiment is still a bit mixed, though.
It is. It's generally bullish because of the sheer size of the deal and the 2026 plan. But there's still a lot of concerns.
Which is actually a good thing if you're bullish long-term.
Absolutely.
Yeah.
It means the fusion story isn't fully priced in. There's still room for big institutions to come in later if and when the company proves itself.
Okay, let's pivot to the bear case. This is a big one. The primary risk has to be execution.
It is. Full stop. Fusion is commercially unproven.
We have to be clear about that.
We do. The physics works, but doing it economically, continuously, at scale, that's the part that's eluded everyone for decades. TAE expects no material revenue for years. The execution risk on that 2026 plant it's enormous.
And can we talk about that $300 million again? I mean, is that really enough to build a utility-scale fusion plant? It sounds like a drop in the bucket.
That's a great question. And no, it's not. The $300 million is seed capital. It's to get the ball rolling, de-risk the initial engineering.
So they'll need more money. A lot more.
Billions more over the next decade. The whole structure is designed so they can go back to the public markets for more funding rounds later once they hit some technical milestones.
But if they miss those milestones...
then those funding rounds get much, much harder to do. And the company just stays a cash-burning machine.
And we have to mention the political risk. It's unavoidable.
It's absolutely part of the investment environment. That political association brings major headline risk.
Right. And watchdogs have already raised concerns that this could be seen as a cash grab to get federal funding.
Yes, and that kind of scrutiny from Capitol Hill could definitely make some big institutional funds hesitant to get involved, at least for now.
So when you add it all up, the volatility we've seen in the stock isn't a bug, it's a feature. It's a binary bet.
It really is. But the counterargument from the bulls is that all these risks, the execution, the politics, are already reflected in the beaten down share price.
So the risk is priced in.
To a large extent. And
Yeah.
if they actually start construction in 2026, the potential upside from this level could be, well, pretty dramatic.
So looking ahead, what are the near-term catalysts people should be watching for?
Okay, next 3 months. First, watch for progress on the S4 merger filing. That's what triggers that final $100 million in funding.
A key de-risking event.
Huge. Also, expect to see detailed investor presentations, roadmaps, CapEx plans, maybe even specifics on where that first plant will be sited.
And I'd imagine they'll be hitting the conference circuit hard.
Oh, for sure. You'll see them at Fusion and AI conferences, repositioning themselves as an AI energy infrastructure player.
So this is not a short-term trade. The investment horizon has to be long.
Has to be. This is a multi-year story, think 3 to 7 years, that hinges on hitting those fusion milestones.
So the big takeaway here is that you're not really investing in a social media company anymore.
Not at all. You're investing in a complex optionality story.
Yeah.
You're holding the media asset as a funding vehicle, but the real value, the entire bet, is on them becoming one of the world's first public fusion power platforms.
It's a high-stakes bet on deep technology and capital allocation. This is definitely one to watch for those with a long-duration view and high-risk tolerance. Until next time, if there's a company you want us to look into, leave it in the comments below and make sure you subscribe so you don't miss our next analysis.